Ladies, are you sometimes confused about your taxes and how it all works, especially if you're a small business owner? We'll stand by because we have got some tips and tricks for you. Welcome to the Rebel Tribe, where we work every day to empower women to do more, be more, and see more. This is Beverly Puckett, today's guest. She is a tax expert, and she is going to give us some really good advice on how, as women, and especially as women entrepreneurs, we can maximize our tax refund or decrease how much we're paying. We all see the news about how the big guys don't pay any taxes. Well, why should it be limited to the big guys? So, Beverly, welcome.
Hi, how are you, Melody Ann?
I'm good. I'm good. I want to get right into it because we have a lot of stuff to cover. So I would want to start right out with, as you know, I talk to women. That's my whole thing is women. And as women, I don't know how many of them really think much about taxes. I know I didn't. I always let my husband take care of it. And I was wondering if you had any words of wisdom for us on.
Well, all women should get involved with their taxes. Even if they're married, they need to know what's going on. Um, that includes being involved with their finances and their investments before it's time for taxes. That way you'll understand better what's going on when it's tax time.
So is there anything in particular we need to be looking for?
Well, women need to be aware if their husband passes away first and they own a home, they have 2 years in which to take advantage of his $250,000 capital gain that they don't have to pay taxes on. So that gives them a total of 500,000 as long as you sell the house within 2 years. These days, people are making profits of more than 500,000 when they sell their home. Maybe they've been in it 30 years. They bought it when it was $19,000, and now all of a sudden it's worth 600,000. So they need to make use of that $500,000 that is subtracted from the profit, and that way that reduces the capital gains tax that they have to pay.
Wow, I did not know that. And I am in that situation house-wise. We bought our house for like 60 some thousand dollars, and the last appraisal was over 500,000. So I could
Yeah.
potentially find myself in that situation. So that is good to know. Thank you.
Yes.
Now,
That's just being involved with uh, taxes, being involved with your investments in general. Um, and most of what I thought we were going to talk about was business,
well, we
and
are. We are,
it
trust
good.
me.
And so I have lots of information about that.
We definitely are, because I know there's a lot of women entrepreneurs out there, small business owners that don't realize all of the tax benefits that come with owning a small business. In fact, one of the reasons when I was first getting started, one of the big reasons that the my mentor gave me was all of the tax breaks that I could take advantage of as a small business owner, even if I wasn't in profit yet, because that was always a concern is, well, I'm not making any money. How can I take all these tax breaks? And she said, it still applies. So,
Right. And the IRS does look at it and expects you to make a profit at least it 1 year out of every 5 years to be able to continue taking off losses, taking off expenses. Otherwise, they look at it and say, "Oh, that's a hobby."
okay, well, and that's something else that I didn't know. So I've not ever been in that position. So I did not know that. That is also good to know. Great. What else? What else do we need to know? Because tax time is coming. So as far as things that are tax deductible, as I was talking to you earlier today, as I was explaining, I have I signed a contract last week for some things that I'm having done for my business. And as I was leaving, she reminded me that it was tax deductible. And for a brief second there, I was like, it is? And then I was like, oh yeah, you're right, it is. But if she hadn't said something, I might not have remembered come tax time a year from
Mhm.
now to take that off. So what are some things that are tax deductible as far as home businesses?
Well, um, you've got advertising expenses, which can include such things as promoting yourself on Facebook, um, and your fees that you have to pay. That could be with the Secretary of State when you file your business with the state. It could have to do with memberships that you need to have to get access to the networking you want to do. Like if you're in a BNI group, it can include mileage for sure. And there are lots of programs out there to keep track of your mileage that's related to business. Um, I can't remember all the names, but Everlance is one example that I have recommended to my tax clients to use. Um, Going down supplies that you need for your business. If you're selling supplies, basically, and you're buying some for self use, you should keep track of that separately and not take that off as a deduction. If you're using it yourself, don't take that off as a deduction. Like that could be makeup, that could be like I do creative memories. If I'm using the creative memory supplies for myself, don't subtract those from the taxes. Um, One of the things that people need to be aware of, because there are different forms that get filled out for taxes, is what business formation they are. And there's three basic formations other than a Schedule C, which is like Walmart or something like that. But let's assume that our small business owners are not Walmart. So you're either a sole proprietor, in which case you file a Schedule C with your regular return, personal return, or you're part of a partnership, or you're an S corp. Partnership and S corp, they file differently. They file a separate business form, tax form, and that is due March 15th, not April 15th. Then your personal return is due April 15th. So that's an example of something you need to know what kind of business formation you have.
Now, I've been told, because I've done network marketing for like 20 something years, and I was told a long time ago that if the company you're with requires you to have an auto ship in order to get paid, that you can deduct that monthly cost. Is that true? I never have, because it always seemed a little sketchy to me, but
It seems sketchy to me. I have not ever had that kind of business that I've either owned my own myself or that I've done taxes for. So I've never had anybody try to write off their auto ships when they're saying it's required by the company. I probably would hesitate to get involved with that kind of company. I, at one point, was with a company that had a minimum quota, and I got out. Went back in when they got rid of the quotas. Um, so I would kind of agree with you. I think that's a little sketchy.
yeah, I don't know. Like I said, there are actually some companies out there and that actually require you to not only have a minimum purchase, but they actually require you to be on auto ship to get
Wow.
paid. And it's like, if it's a
That's
requirement, I mean, I can kind of see, because, okay, now it's required to do business and get paid. You have to do this. So it's kind of a mandatory expense. But in the same token, it's for, like you said, it's for personal use.
personal use.
So
Yeah.
I don't know.
Yeah, that
Yeah,
I
I've
I
always been
don't
a little
I don't go
hesitant.
for that. And there will be uh tax preparers that will do it without question. I have always been very conservative, and I'm proud of the fact that I've been doing taxes for over 35 years and never had a return get an IRS letter that, in other words, your tax preparer did something wrong. I've never had that occur. So I'd rather be on the conservative side and be able to say that.
Oh, yeah, because generally that means you owe more money. Okay, so that letter usually comes with a bill. So yes, I have never had
Sometimes it
one.
does. Yes.
Okay, so as far as advertising are like all forms of advertising available? Are they tax deductible?
Pretty much. For example, even my name badge for my business, it's a form of advertising. When I'm wearing that, people are seeing not just Beverly Puckett, but Beverly Puckett as a tax preparer, for example. So they know that I'm advertising my business. Um, uh, Pension, profit sharing, 401k, those things you can be making contributions for retirement, both for yourself and if you have any employees.
Okay.
Those are not advertising, they have their own line item for retirement plans, as expenses of the business. And that is a real incentive for a lot of people to have their own business.
Now I know a lot of these companies that homeowners or home business owners get involved with have regular like annual meetings, and we all go, and most of us are excited because we can deduct this from our taxes because it's a business trip. But I know a lot of them that go bring families, depending on where it is, they'll bring their families with them. So how does that work exactly? So I have a hotel room, I'm sharing it with my husband who came with me because the meeting's in Las Vegas. So I got the hotel room. He came with me. He's sharing the
Right.
hotel room. Is the entire cost deductible, or do I have to?
Well, if you went by yourself and you were going to get that same room, yes, you could take that off. Um, these days, the IRS has really cracked down on quote unquote luxurious conferences, and there is a limit to how much you can take off. And sometimes the conference uh, providers will even give you an idea of how much you can take off on your taxes. Now, when it comes to family members, you cannot take off any of their meals, for example. You cannot take off anything that's ascribed separately to anybody but yourself. Um, but it still saves you money for a vacation, for example, by you being able to write off your part. If you, I don't think the IRS would get this close to looking at it, but let's say you went by yourself. You're probably going to get a relatively small rental car. But then you take your whole family, and all of a sudden you've got an excursion, a Ford Excursion or an Escalade. Well, maybe, I don't think the IRS is going to look at that and say, no, you can't do that. But you don't want to flaunt too many things as far as red flags. I'd put it that way.
You were talking about meals. How does that work like for business dinners or business luncheons? So if I had lunch last week with a friend, but she's also going to be a podcast guest, and that's what we talked about. We actually talked about her being on the podcast and what she was going to talk about. So does that qualify as a business expense?
The IRS again has split it out. They've made it more complicated. There's actually 3 different levels. There's 0% to be able to be taken off, 50%, and 100%. I think the way you described that, probably 100%, But when I have people giving me those expenses, I actually start looking up the newest definitions from the IRS to make sure I'm taking things off with the proper percentage. So not everything is going to be 100% deductible when it comes to meals. You kind of want to look at the guidelines.
Okay. Well, that leads right into percentages, because I've also been told, I have so many questions because I've been doing this for 23 years. Okay. And I've always been told different things depending on who was doing our taxes. We finally found
Sure,
some,
sure.
but so I've been told that since I use my office, I have an office in my home that I work out of. And I use my cell phone both for personal and business. My internet is both personal and business, that
Right.
I can deduct a portion of my phone, my internet, and I can even deduct a little bit for having a home office out of my home. So how does that, I have never deducted the home office, to be honest, because I've never been, again,
It's
comfortable
smart.
with how that works.
Okay.
Okay.
It's
So,
actually smart that you haven't, and I'll tell you why. Yes, you can do it. And normally what you would do is take the square footage of the part of the house that is used absolutely, absolutely, exclusively for your business and divide it by the square footage of the house. And that's not including the garage. That's what you supposedly can take off. But here's the other flip side of it. You own your home. You're taking what that does on your tax return is take depreciation. When you take depreciation, that is one of the items that you have to add back in when you sell your house, and you're going to owe that money back. All the depreciation that you take off over the years for part of your home being used for business, you're going to pay that depreciation back to the IRS. So that's I have never taken off any square footage of my home for that reason. Now, if you're renting, it's a little bit different because you don't own that house, but that you're living in. But as far as taking off a percentage of your cell phone, I I've had various figures given to me. I generally recommend 50%. I have had some people say as high as 90% business expense. But you can't ever take 100% of your cell phone expenses off for taxes. Let's see, you mentioned also, what was it?
internet.
Internet. Again, that varies. Some businesses might depend more heavily on internet than others. So there's some justification for having various percentages taken off depending on your particular business.
I don't know. I do my phone because I and my internet just because I am mostly online a lot, but I've never been able to really claim my office. I just never felt right about it, because, and not because I didn't understand that. I didn't know about the whole depreciation thing, but to me it was like, well, I have a bed in there, a small little bed, and sometimes
Yeah,
when the grandkid or whatever comes over and he sacks out on the bed in the office, and it's like,
yeah, you
uh,
can't.
you know.
Yeah, that is definitely one where you can't.
I mean, it's not like they were going to come in and check my house and go, "Oh, you've got a bed in here, you're in trouble." But I just never felt comfortable with it, so I never
Yeah.
have.
No, that's a good idea in your case. If there's a bed in the room, that generally doesn't fly.
So it's just, I don't know. I'm not a very good tax cheat. I'm just saying.
No, that's good. It'll never come back to haunt you.
Okay, so you were talking about mileage. Is there anything else we can claim on our car?
Okay. There's two ways to do expenses with your car. And first of all, when you first start out with your business, if you start out with actual expenses, keeping track of your gasoline expense, keeping track of your repair bills, keeping track of your oil changes, things like that, you will never be able to switch to mileage, and you're going to regret it, because you get such a better benefit tax wise for taking mileage off. The mileage from year to year, you don't have, you can switch back and forth. If you start with mileage, you can switch to a year. Let's say 1 year you've had just horrendous expenses on your vehicle, and it's way more than the mileage write-off is going to be. That year you can switch, and then the next year you can switch back to mileage again. But it just is determined by, did you start with mileage or did you start with expenses?
Okay.
You can't do both, bottom line.
And you recommend mileage if we're gonna,
Yes.
okay.
I personally have never seen anybody have more expenses than whatever the mileage rate is that year that the IRS puts out, because they change it every year.
Okay, good to know. I've always done mileage, so good to know.
Good for you. So far, you're doing everything right.
Mm, like I said, I'm a terrible tax cheat. I dread the day the IRS knocks on my door and says, "Hey, we're here for your audit."
They won't do it that way.
Well, I know, but still, I dread the letter in the mail that says, "We're going to audit you."
I kind of specialize in handling those letters, so
Yeah, well, I've
just
never
let me
gotten
know
one,
if you get
and
a letter.
yeah, I've never gotten one, and I'm hoping never to get one.
I don't think you will, from the sounds of it.
So what
Um,
about things like, okay, so I've signed up for a couple of long-term, like, I don't want to call, they're not workshops exactly, they're like coaching programs. I mean, I'm going to be working with a couple of these ladies for, a year, or maybe even longer. So workshops, seminars, coaching programs, do those count?
sure.
Okay, so I can
Hopefully,
deduct.
you're making up overall more profit because of the coaching sessions.
Well, that's the
So
goal.
that's the justification for being able to take it off on your taxes.
Okay, that's good.
If it's for the benefit of the business.
Okay, that's good. Yeah, that's kind of the plan.
And I'm going to lose my laptop here, my battery.
Uh-oh.
Yeah, because we were on so long before.
Okay, well then let's just quick get to what are the top things we need to know.
Okay, one is if you have a Roth IRA, don't ever withdraw any funds from it the first 5 years you have it, because you will owe tax penalties. If you withdraw funds from your 401k because you think you're going to use that for a first time home, you will not be able to say, oh, well, I don't owe taxes on that. And keep in mind, if you're under 59 and a half, if you're taking money out of a 401k, say you leave jobs or whatever, you're going to pay two types of taxes on that. You're going to pay ordinary income tax, and you're going to pay a 10% penalty tax. So the corporations, in other words, your employer, I've never seen that they've taken out enough taxes when you take money out of your 401k. I've never seen it happen. You always end up owing it tax time. Let's see. Oh, if you underreport your income, there's 3 reasons not to do it. Actually, 4. 1, it's illegal. 2, it's illegal. 3, if I'm helping you report your income now, I cannot get any abatements of any penalties and interest for any unreported income. And then 4, Don't put yourself in the situation of the 280-plus-year-old handyman we've had here in Bella Vista. The only reason they're still working when they're in their 80s is because they never turned in their cash income on their taxes. And so think about what their Social Security is. It's dirt. There's just almost no Social Security there because they were living off of their cash income and we're not reporting it. So that's important. The IRS is using artificial intelligence to generate quadruple the number of letter notices to the public right now. So more people are going to get letters. I took care of a client that had a letter from the IRS stating that they owed $100,000, and I was able to prove to the IRS that they only owed $1,000. And so the client was very, very happy about that. But a lot of people are too afraid to get that taken care of. They just think, oh, well, I'm going to have to pay it. Not necessarily. I was able to prove he didn't owe it. I talked about the fact that tax filing date for partnerships and S corps is March 15th. Be aware that H&R Block, Tax Act, and Tax Slayer have transmitted confidential data for tens of millions of their taxpayers to Facebook and Google. So your
Nice to know.
information is out there.
Nice to
The
know.
company I work for will not do that. Those are kind of the main things I would mention.
Okay. I gotta ask. I gotta ask only because I worked as a waitress for a many number of years and did not report my cash tips. How did they find out it's cash? How did they find out?
They, especially with restaurants, they've got a really, really good idea. The
Uh,
general percentage of tips that people are paying up for different types of restaurants. And so they'll look at that and say, nah, you're not. And they'll also, at that point, if they suspect it, they'll requisition your bank account statements. And now maybe you always kept the cash out, never put it in the bank. But sometimes people that work in restaurants will eventually get it into the bank. And so there's the evidence that they made that money.
I was just curious how they found the handyman because it's like, okay, it's
Well,
cash,
no, I'm saying they never did find that. He lived on his cash. He
right?
never reported it. And so his Social Security was
Oh,
nothing because he never reported the income. So there was no Social Security
okay.
available to him when he retired.
Oh, I
He,
misunderstood. I
yeah,
thought you meant that they got caught and they were like giving up because I
no,
know like my I have a friend who's her social security was basically and her income tax was basically nothing because she owed so much in student loans that she never paid that they just took it. They just took it. So,
they will take whatever you owe for student loans, any back taxes. If you have refunds coming, they're going to take it before you get your refund.
so yeah, so that's what I thought you meant is they got caught,
No,
but
no, no,
okay.
no. He just did it to himself. Each of those two men did it to themselves, that they reduced the potential of their Social Security income by never reporting all of that cash income. So they probably had like the minimum Social Security instead of what could have been double or triple that.
Ah, okay, that's awesome.
Yeah,
Oh
so
my
you
goodness.
always want to report all of your income, whether it's tax or not.
Yeah, either way, you're gonna end up paying in the end either way, so you might as well
Yeah,
just be upfront and unless we can figure out how to be Elon or Jeff
and really make the big bucks.
and not pay. Make the big
Well,
bucks and not pay.
some of them are paying.
Hmm, I don't know. I don't know. I don't really worry about it. It's not my thing. I had a okay, she died. Well. I'll just cancel that.